welcome to ET Now. You're watching Market Fatafat with Anushka Sarkar and Sharad Dubey, a show where we'll track all the top buzzers in trade today. But before we get going with all the top buzzers, Sharad, let's take a look at how the markets are faring. A fairly range-bound day today.
Well, yes, Kanishka, there is a lot of volatility coming at least on the initial trading session, but now it seems Nifty has come across that 25,050 mark and it has turned stable. Also in this recovery, Nifty Bank would be in focus, especially because of the heavyweights. HDFC Bank and ICICI Bank actually giving a strong strength to Nifty Bank. That's up almost 600 points in the day's trade as well, trading between 56,850 to 56,900 levels. Of course, HDFC Bank and ICICI Bank, these are the two top stocks which are actually giving a strong momentum to both Nifty Bank and also to a certain extent to Nifty. On the other hand, look at it, Reliance, that has actually fallen more after a weak set of numbers coming in, and we can see the sell-off intensifying and Reliance going almost 3.5% down. But interestingly, Kanishka, the broader indices have supported the markets, be it the mid-cap index or the small-cap index, that has actually done well as well. And stock-specific, especially the metal space and the banking space, has also done well. Also, a little bit of IT and FMCG is where the selling pressure is what we are getting. But now let's go to an exclusive interaction coming in with IREDA's spokesperson, and IREDA's CMD Pradeep Kumar Das will be discussing the company's plans ahead and touching upon the recovery strategy from Gensol Engineering. Listen in to the excerpt of this conversation.
Our provision has gone up 363 crores, majorly on account of Gensol. The NPA has gone up 1400 and odd crore. Gensol is having 500 and odd, and another account, Andhra Group, they have around 800 crore plus. See, typically why NPA has gone up and not that corresponding provisioning is, we had provisioning done in 1920 for that account.
Okay.
So it is not now this account
2020.
1920.
Okay.
Yeah, 2019-20.
Okay.
Because this particularly post Andhra government decisions, the then Andhra government decision to reprice the PPA, almost they brought it down to half. And what I was told that they were not even releasing that cash flow with respect to that half also. So that impacted badly, not only to this group or many groups also. So those who are having big pockets or multiple profiles and all, they could sell through. Since this group which was largely having Andhra-based PPA-based assets and all, so for them it was tough time. So they had a stay from the High Court to not to take any coercive action and not to consider NPA. Best corporate governed company and most disciplined organization with respect to numbers, we had more, the provisioning as per the
Navratna CPSC.
Navratna we become recently, but yes. Probably we are having a much better corporate governance standard, many more Maharatna companies.
Okay. Okay, so how much recovery can we expect in this fiscal, and what kind of efforts you are taking for the recovery?
When you're talking of NPA and recovery, there are 2 points I'll raise. One, in the entire history of the company till June, company had financed 1.62 lakh crores.
Okay.
And the cumulative write-off till such time is only 135 crore.
Okay.
NPA used to happen, but write-off was not happening. So that is
so
what
you can assure your investor, shareholder that write-off will not happen, so they should be rest assured.
See, I cannot talk about future at all because I am not God. But what I can tell, in the past, in 38 years, if we have exhibited this kind of culture and maturity, and we have been dealing with India One Renewable since the day one when we have formed, and we have exhibited that kind of discipline and maturity. If we talk about not 38 years, that's a very long time. Let us talk about 5 years. 5 years back, our gross NPA was 10 plus, net NPA was 7.18. 6 months back, this gross NPA came down to 1.35 and net NPA came down to 0.95. This reduction is not simply by enhancing the loan book. It is largely by realizing the recovery without having haircuts.
Okay. My final question would be, so what are your fundraising plans going ahead, and the latest announcement by CBDT that investment under 54 EC will eligible your bonds also. So how much relief that also gives to you?
See, we are the only pure play green finance NBFC in government space. And we are largest in government private taken together also. We do not have any single benefit.
All right, so that's the latest word coming in from the IREDA CMD. But let's get going with all the top buzzers in trade today that are buzzing in trade because of either news flow or on the back of technicals. And to discuss them all, we are now joined by Ravinder from our research team. And on the technicals, we have Sameet Chavan, who's head research, technicals and derivatives at Angel One. So let's get going with all the buzzers today. Now, first up, we have RIL, which is in the focus. As Sharad was pointing out, it's down more than 3% in trade today, and it is in focus after posting a mixed set of numbers for Q1 of FY26. Revenue, that fell about 7% on a sequential basis. EBITDA, that's the 2%, but net profit, that managed to jump about 39%, aided by one-off gains. Now, Jio, that led growth with 1.3% ARPU rise, and now it has over 200 million 5G users. Digital services margins also improved to 43.7%. However, retail and O2C, they saw sequential revenue declines of 5 to 6%. Meanwhile, Reliance Retail, that added 388 new stores, taking the total to over 19,500. Let's take a look at what the brokerages are making of it. They remain fairly optimistic. For instance, Macquarie, that has an outperform rating with a target of 1,500 rupees on the stock on the back of strong Jio numbers, and it sees retail as a weak segment. On the other hand, there's Morgan Stanley overweight rating again with a target price of 1,670 rupees and remains optimistic when it comes to its guidance. Motilal Oswal, that also has a buy call on the stock with a target price of 1,700. Now, Jio, that is expected to drive growth as per the brokerage. On the other hand, we have Nuvama, which has a buy call again with a target price of 1,761. And expects clean energy to be a key catalyst. But moving on, let's focus on some other stocks too. Dr. Reddy's is the stock that you've picked out for us. Sharad, what's the news flow here?
Well, interesting news flow coming for Dr. Reddy's. Kanishka, there is actually an adverse impact, but the stock is recovering from the day's trade itself. The US FDA for its Andhra Pradesh facility has given almost 7 observations from Form 483, and of course the start of the trade, if you look at Dr. Reddy's, there was a gap down opening, but after that there's a recovery coming and stock is currently trading at a flat level. Also, the analyst committee is still bullish on the stock, especially on the export front, and the clarity which comes for most of the pharma exporters, especially on the tariff front itself, as still now the overall announcement coming from Donald Trump is that there will be roughly 200% tariffs, but this can change also. 1st August, we are waiting the actual numbers to actually come out, and also this could be a place where more negotiation can happen for the Indian pharma players as well. But as of now, Dr. Reddy's this month itself hasn't given much returns to the investor. The stock is roughly 5% odd.
All right, then let's move on. And Ravinder, now HDFC Bank is the stock that you've picked out for us. How were the numbers and what are brokerages making of it?
Well, yes, HDFC Bank has reported their Q1 FY26 number, and bank reported an NII at rupees 31,438 crore with an uptick of 5.5%. And if we talk about PAT, then bank reported a PAT at rupees 18,155 crore, which saw an uptick of more than 12% on a year-on-year basis. And bank's PPOP also saw an uptick of approx 50% on a year-on-year basis. And board also recommended a bonus shares of 1:1, and board approved the special interim dividend of rupees 5 per share. So overall, a mixed set of number of HDFC Bank in Q1 FY26, and Morgan Stanley has come out with their note, and they have maintained their overweight rating with target price of rupees 2,475, and HSBC has also maintained the buy rating, and they have hiked target price to rupees 2,300 as compared to earlier target price of rupees 2,290. So back of a mixed set of number, HDFC Bank is in focus, and stock is holding a gain of more than 2%.
All right, stock trading with the gains of about 2% as we speak. But moving on, capital goods stocks, they are also buzzing in today's trade. Now, why? This is because the government may be looking to unlock some fresh growth drivers for the economy through higher capital expenditure. Now, ET Now sources, they have indicated that discussions are underway with key ministries to explore new areas for capex expansion, especially beyond traditional sectors like railways, highways, ports and shipbuilding. In fact, the government has already set an ambitious target of 11.2 lakh crore capex target for FY26 and is now considering boosting investments in new areas like urban infrastructure. So the goal is to maintain the current momentum and support stronger economic growth. Now, this renewed capex push is expected to drive demand for industrial machinery, construction equipment and engineering services, making capital good companies a key beneficiary of this policy shift as and when it happens. And hence, all the capital goods stocks continue to be in focus, trading with gains at this point.
I'd like to actually add some more points to the capital goods theory. And first of all, foremost is that the interest rate scenario is actually going down. So this augurs well for the capital goods and the infra space as well. And recently, ABB India's global parent also came out with its numbers for the Indian arm, which was not as bad as what the street was expecting. And after that, over the last 3 to 4 trading sessions, most of the capital good theme stocks are rallying. And of course, there was a significant correction on 52-week high levels from all these stocks. So the valuations are favorable. Now moving on, IRCON would be in focus. And 2 important news flows. They have received 2 large orders from MMRDA, and if you combine them, the order flow is coming roughly more than 1100 odd crore rupees. Also, they have a JV with RVNL where they have received an order as well. So, IRCON back on the news flow of order wins is back in action. But overall, if you look at the railway space, that has been stuck in a consolidation. And the stock today in the day trades is moving on the positive side. The stock is up 2 odd %.
All right, so that's the reason why IRCON is in focus, trading about 2% higher as we speak. But Rabinder, now coming to you, ICICI Bank is a stock that you've picked out for us. It was also one of the candidates that reported its numbers over the weekend. How are the numbers and what are brokerages making of it?
Well, yes, another bank, ICICI Bank, is in focus on the back of their Q1 FY26 earning. And bank reported NI at Rs 21,634 crore with an uptick of 10.5% on a year-on-year basis. And if we talk about PAT, then company's PAT also company reported a PAT at Rs 12,768 crore with an uptick of more than 15% on a year-on-year basis. And PPOP saw an uptick of 17% on a year-on-year basis. And the management in the con call said that the margins in Q3 and Q4 should show less volatility due to revised methodology for NIM NIMS reporting. So overall, a good set of number of ICICI Bank in Q1 FY26, and HSBC has maintained the buy rating and high target price rupees 1680 as compared to earlier target price rupees 1670. So back of the good Q1 FY26 earning, ICICI Bank is in focus and stock is holding a gain of 2.5%.
Well, yes, thanks Ravinder for pointing out the overall earnings and what the brokerages have given their opinion on. But moving on, our colleague Ankur Mishra has also interacted with the management of ICICI Bank. Please listen in.
The movement in the net interest income from Q4 to Q1 was primarily due to repricing of loans linked to external benchmarks, which was according to actions which RBI has taken. Some interest reversals on account of NPA seasonal additions in Kisan credit cards, which normally happens in the first and third quarter, and offset by reduction in deposit rates both on the savings and domestic, from savings and term deposits. We do expect the NIMs to sort of compress a little more in the next quarter. After that, we will see how it goes. It depends on RBI's actions, overall liquidity, and if you know from a long-term perspective, NIM was around that 4% before the commencement of the rate hike cycle, which happened in FY22.
All right, so that was ICICI Bank's management on the way forward for the lender in FY26. But next up, Sameet, now coming to you, L&T is the stock that you've picked out for us. How is it looking on the charts? Now, it has recovered from the day's lowest level and currently trades over 1% higher. It is also one of the beneficiaries of the additional capex announcement as and when it may come, as we were discussing earlier. But how are the charts looking for this one?
Well, this has been a laggard since last couple of months. If you see the price, it has done nothing. From the levels of 3700, it has been gradually declining and has now reached its important cluster, which is around 3450, 3500. There's a strong support that coincides with the previous highs, the previous breakout point from where the rally began around 3400, 3300 in the month of May. So since morning, this stock is finding some sort of buying interest at lower levels. So it would be important to see whether this stock managed to surpass 3550, 3600, which is the next hurdle, which coincides with the 20-day exponential moving average. If this stock manages to surpass 3550, 3600 on a closing basis, we could see resumption of uptrend, and then probably this stock can head back to its recent highs of 3700, 3750.
Ravinder, let's move on to CEAT, and of course there's an important broking note has come up for the stock as well. The stock is buzzing in trade. What are you taking from this institutional report?
Well, yes, CEAT is in focus, where quoting institutional equity had come out with a note, and they have maintained their sell rating with target price of rupees 2,900. They expect consolidated EPS estimated by 1 to 2% on higher revenue growth assumption, and Kotak expects the domestic business to report strong operational performance over the coming quarters. However, the risks are related to Camso acquisition, especially related to US tariff, which may significantly impact the performance of the business in the near term and medium term if the tariff situation prevails, that they believe it is not being factored in as a current valuation. Apart from this, Avendus Spark has also come out with the note, and they have downgraded the stock to reduce from buy rating, and they have cut target price rupees 3,500 as compared to earlier target price rupees 3,874. So back of this of brokerage, stock is in focus, and the stock is down over 7%.
So CEAT is down over 7% as we speak on the back of those brokerage notes. But Sameet, now coming to you, Jindal Stainless. Stainless is the stock that you've picked out for us. What are the targets looking like for this one? It's seen gains of about 3.5% in today's trade. Do you expect this uptrend to continue? What are the targets we should be looking at?
See, if you look at it on a daily time frame chart, the stock has been, oscillating within the boundaries of a triangle pattern, and now it's challenging its higher boundary, which is around 702, 705. So in case if this breakout happens, we could see the stock heading towards 740, 745 in next couple of weeks time. Volumes, have been increasing since last few days. So with volumes increasing with the same pace, and if the stock manages to surpass 702, 705, which would confirm the breakout from a triangle pattern, then yes, this stock is likely to unfold a good rally in the near term.
So those are the targets to track for Jindal Stainless. But moving on, let's also put the spotlight on Bandhan Bank, which is in focus today after a weak set of Q1 numbers that it reported. Now, net profit that plunged 65% on a year-on-year basis to 372 crore rupees, mainly due to a sharp rise in provisions, which more than doubled to 1,147 crore rupees. NIIs also fell more than 7% on a year-on-year basis, whereas NIMs, they dropped to 6.4%. Asset quality that worsened with GNPA rising to 4.9%. CASA ratio that also fell sharply to 27%, but total deposits that saw a growth of about 16% on a year-on-year basis. In fact, we had a word with the management earlier this morning, and they say that the bank continues to reduce its MFI exposure, targeting 8% of total growth this year, and aims to cut GNPA to 4.5% by the end of this financial year. In fact, the management sees credit growth ahead, aided by rate cuts, but expects continued challenges in the microfinance segment. So that's the reason why Bandhan Bank is in focus today. The stock currently trading about 3% lower, around those 181 levels.
Thank you, Kanishka, for Bandhan Bank's management quote as well. Just on our screen, Mahindra Logistics has come out with its numbers, and the numbers are on the weaker side. The consolidated loss has also widened on a year-on-year basis, and we can see the stock itself. The stock is down almost 5%. Earlier, before the earnings, the stock was down almost 2 or 3%, but a sharp downtick coming in the stock going down almost 5%. The consolidated PAT numbers also falling. But now, moving on, UltraTech Cement has also come out with its numbers, and initial numbers are coming in. PAT has gone up at 2260 crores on a YOY basis. While we are looking at the initial numbers, the revenue also, if you look at the screen, that has also jumped up as well. But overall, the estimation numbers, we'll be getting them as well. It was largely expected that the numbers would be coming in strong, but we'll be looking at the internals, especially the EBITDA per ton numbers, and if you can see if there is any reversal in the stock as well. But currently, there is a sharp fall in the stock, and of course you see the numbers which have come in slight below the ET Now poll numbers when it comes for the revenue as well. Now of course we will be looking at UltraTech Cement as a stock and all its internal earnings and the press release as well, but the stock in focus would be Bajaj Consumer. And there's an important board meet happening on 24th of July, and this is regarding the share buyback as well, and because of that the stock has moved up in trade, but now it's cooling off. A stock ranging between 240 to 245 in the day's level and currently in the green.
All right, so that's the news flow on Bajaj Consumer. But moving on, Sameet, you picked out Ambuja Cements for us. How are the technical charts looking for this one? It's up about more than 1.5% in trade today. In fact, just in the past month, it has given returns of more than 13%. Do you expect this up move to continue? What are the targets that we are looking at?
Finding its mojo back. If you see in last a couple of months, the stock has done well after making a low somewhere around 460. It has already risen more than 25-30% from its recent lows in such a short span. And with today's price action, the stock has confirmed its bullish flag breakout as well. So from here on, the next important resistance to watch out for would be around 625 to 636. And we would expect slowly, gradually, the stock would head towards its next resistance zone. On the low side now, 600 followed by 580, 585 would act as a very strong support.
All right, then let's move on and put the spotlight on AU Small Finance Bank as well, which is in focus today after a soft Q1 performance. Now, net interest margin for the company declined sharply to 5.4%, whereas delinquencies, they rose due to stress in microfinance and south-based mortgage segments. Now, credit cost guidance was revised upward to 1%. In fact, Nuvama came out with a brokerage report on AU Small Finance Bank after that soft quarter. It has maintained its reduced rating with a target price of 650 rupees.
Well, UltraTech Cement, the numbers are coming in, and revenue has jumped in almost 13% on a year-on-year basis. Initially, the numbers are looking largely in line if we compare the revenue and the margins front as well, and we'll be also getting you expert analyst commentary also in the stock. There's a kind of a recovery happening from the day's low as well for UltraTech Cement as well, and interestingly, the EBITDA per ton coming at 1198 rupees per share. Now, of course, sequentially it was expected that this would be a good up move. Revenue jumped 13% up, net profit jumping 49%. The grey cement realization, that has improved 2.2 odd %, and the company has given a consolidated volume growth of almost 9.7 odd %. So largely inline set of numbers are coming in, as and when we are looking at the internal numbers, they have started to improve as well. So we might see more recovery happening in the stock as well, but currently the stock is trading in the green, up almost 1250. Of course, you can see the numbers also on the screen. The PAT jump is there, but that is largely in line with what the estimates were for ET Now. Revenue seeing a jump of 13 odd %. The realization was cement, that is up 2.2% sequentially, and overall the numbers largely seem in line, and some operational parameters show a strength as well. Also, apart from UltraTech Cement, Sameet UPL is in focus, and of course what are important technical charts stating when it comes to UPL? We remember some days ago there was a good spike as well in the stock.
Yes, this stock is clearly shown some strength in last 2 to 3 weeks. In fact, since morning this stock has been buzzing with substantial rise in volumes. If you look at the daily time frame chart, it has already given a breakout from its multiple resistance zone, and it is now trading at its nearly 10 to 12 months highest point. So overall, we expect further rally to unfold, wherein the next important levels to watch out for would be around 745, 750. It's a buy at current level. Any decline towards the 700 would make it an attractive risk to reward bet. So from a short-term perspective, yes, it's a good buy at current level. It was stop around 680, and the immediate target to watch out for would be around 745, 750.
All right, then, so that's the view on UPL. Those are the levels to track buy for the short term. But let's get back to UltraTech earnings. In fact, we are joined by Girija Shankar Ray, who's the lead analyst, Cement Institutional Equities Research at Yes Securities. Hi, Girija. Thank you so much for joining us. And before we get started with the specific, what are you making of the UltraTech Q1 numbers? It's a largely inline set of numbers that have come in.
Hi, good afternoon. Thanks for taking my call. The numbers, as per my observation, what I see, the numbers are not that great. Although it is below street estimates, revenue also declined, and EBITDA is in line with the street estimates. PAT also declined. Marginally, I say it has declined, but as per based out on my analysis, what I see, the highest capacity what UltraTech is having. The recent acquisition of India Cements and the Kesorams. So I believe these companies, the acquired assets are not doing well. I believe that's the reason this time we see a EBITDA per ton of around 1197 blended EBITDA per ton, which is marginally increased quarter on quarter. See, despite having a very good realization in southern regions, so rest of the reasons what UltraTech is having the capacity that must have offset the actual number. But realization perspective, what I say, it is only 2.7% quarter on quarter increase. So little bit of disappointing in numbers what I see.
Okay, so. Slightly disappointing numbers is what Girija believes. But, last time the company had sounded slightly cautious on its near-term demand. Do you think that stance is going to continue given that it's been a disappointing set of numbers this time?
What I see, they have made only 36.8 million ton of kind of volume. So as where I see this is below their 4Q FY25 numbers. In 4Q FY25 they made 41 million tons of volume. So this time it is almost there is a very sharp, I can say, decline of utilization rates. So that is the only reasons where I see top line growth could have much better because of this utilization has came down. And the most important part, what I am saying, that is the realization. Even this quarter, southern region prices were increased by around 15% quarter on quarter basis per bag cement. So net realization, at least as a pan India player, they could have done better than this, the top line growth, and that also that would have flown to their EBITDA level. But if I see their, per ton basis analysis, power and fuel cost and freight cost also, they haven't got much benefit this time. So that's what I believe the numbers are not that great.
So like you said, the numbers are not that great. In fact, utilization was down and realization that you feel could have done much better and that would have supported the top line for UltraTech Cement. So that's the view coming from Girija. Thank you so much for joining us today. Just after the results, we'll connect again. Thank you so much. Market Fatafat. We'll see you tomorrow with more buzzers coming up tomorrow.